Well, Jay Powell is, a very thoughtful and considered man. He's, been chair for quite some time, and he understands what his job is, which is the dual mandate. And he has a very, very tricky job in front of him today, as you've already pointed out. While the actual economic data that's come in, for the most part, has been sometimes a little bit on the soft side, but has been looking, okay. All of the discussion and the forward-looking data about confidence and expectations looks rather chaotic and unsettling. And so I think, we are all watching to see what the Fed does, in terms of how they talk about it. But I think we all know the reality in front of us, which is that the economy right now is being held hostage to this chaos and uncertainty that's coming out of the White House.
So with all of that uncertainty, Heather, with the description you just gave of the economy as it currently is, knowing they're going to provide forecasts of how they expect the economy to look down the road, what is your expectation in terms of revisions we could see to growth estimates and inflation?
Well, already the OECD has downgraded growth for the United States. Certainly these tariffs, and particularly the chaotic way that they're being put in place. One day they're on, the next day they're off, and then they're on again. It's very difficult for businesses to plan. We are already seeing indications that this is affecting manufacturers. There's a recent survey in New York State that indicated a sharp decline in business expectations among manufacturers there. So all of that does indicate that the tariffs could be having, the chaos could be having its I don't know if it's a desired effect, but the effect of making people think twice about what kinds of investments they're doing right now and kind of holding back, waiting for the chips to land and to see where this administration will go. I think, on the other hand, from the consumer side, you're seeing consumers getting increasingly anxious. Their expectations are souring. They're expecting more inflation. And again, that makes the Fed's job incredibly difficult, because if they continue to see expectations of higher inflation alongside investment slowing or people sitting on the sidelines as we wait to see what the administration will do, that's not a great situation for the economy.
Heather, you mentioned the dual mandate. I wonder to what extent you expect a change in language to reflect expectations for a rising unemployment rate. Tariffs, one thing, DOGE is another. And at some point, we're going to see the cumulative effect of these federal worker layoffs. What will that say today?
Certainly. And DOGE is an issue for workers being unemployed, having lost their jobs. That is certainly an important piece of the puzzle. But then it's also important for all of the things that those workers used to do that are now not being done, that may be very important for economic growth. Think about what we've seen, of course, with the workers who had been dismissed, who were in charge of the avian flu, which, if that flu continues to move across our economy unchecked, that will continue to have an effect on egg prices, among other things, across the economy. So the impact, though, of DOGE is difficult, I think, for the Fed to get a handle on, to measure, although they have, of course, an incredible team of economists to do all of that work. But the uncertainty, and of course, with all the court cases coming down the pipeline, will those workers be reinstated? What will we see moving forward? Again, this all makes their job that much more difficult. And I think that the chair will remain, as he has already said, that the fundamentals of where we are, and of course the economy that the president inherited was quite strong, and we're not seeing the kinds of downturn in the data yet, but I'm sure he will express some caution about what's to come.
Well, and when we consider that caution, it was described by Mohamed El-Erian, who, of course, is a Bloomberg opinion columnist, earlier today with some of our colleagues, as being a question of if he's framing the potential of future cuts down the road as good cuts because progress is being made on inflation versus bad cuts, which is easing policy because things are going south in the economy. How difficult is that line to walk?
Well, what we saw in the first Trump term when he raised tariffs and that raised prices, the Fed had some room to maneuver because we did not have the legacy of the inflation that we have now coming out of the pandemic. So now they are still working to get the inflation rate back down to their target rate, and at the same time, the tariffs are likely to raise prices for consumers. But they're also seeing people cutting back. Again, with DOGE, you're seeing these effects on employment. So, the word that I think people are going to start wondering about again is this word stagflation that we were all, of course, talking about at the end of the first Trump term. That was the word on everybody's lips. That's where we were concerned about the economy being.
What will Jay Powell say about stagflation in our remaining moment, Heather? He's surely to be asked about it in the news conference.
I'm guessing, I don't know, I don't have a crystal ball, but I'm guessing he won't say the word. I'm guessing that he will continue to, indicate that, because they rely so heavily on the data, that the decision that they are making today is about the data that's already, in check, and they will remain cautious about where things go down the road.